I am joined to discuss this further by Sushovan Naik, research analyst from Anand Rathi Institutional Equities, and we will understand that how this buyback shapes up in the future. So Sushovan, first question to you is that this mega buyback of 18,000 crore has been done. But there is a chatter on the street that rather company could have gone for an artificial intelligence up move. So do you think that this is the way to look at it, or is this buyback going to go as successful as it could be?
Good afternoon, Harsh. Good afternoon, Aditya. So quickly, on this artificial intelligence opportunity, if this would be utilized, the proceeds, I think, firstly, what we need to appreciate is when we look at the value chain from an artificial intelligence perspective, right? It's only 10% of the spend which Indian IT companies can actually capture. That is basically where you end up becoming potentially implementation partners for someone like a Databricks or a Snowflakes, because building cloud infrastructure or foundation models, I don't think is a core competency for us, at least for services focused IT companies, right? And as far as products are concerned, someone like an Infosys is anyways very strong when it comes to someone like a Topaz, which is basically their AI platform, or a cloud platform of theirs, which is Cobalt, right? And if you look at Infosys last con call, right, where they have very clearly mentioned that for the top banks in the top BFSI players, or the BFSI banks, effectively they are the preferred AI partners for top 10 of the 20 BFSI folks, right? I mean, this also goes on to reinforce the fact that they're actually doing well from an AI implementation standpoint. So that was my limited submission on, from an AI perspective, would the proceeds have been utilized better? And as far as the buyback is concerned, if you look at Infosys, it's primarily trading at almost its 10-year average, almost 20-21 times price to earnings. And I think this is more of a very good signal by the management that, you know, the intrinsic price is higher than this, and it also reflects the execution. As far as Infosys capital allocation policy is concerned, 85% over a 5-year block will basically be utilized for buybacks and dividends, which is what they are doing, right? This particular buyback. 15%, which is if you take their 1-year cash flow of $4 billion, almost 15% will be $600 million. They have done this recent acquisition where they have invested 75% in a subsidiary of Telstra, right? That's one. And also the recent acquisitions like MRE Consulting and the cybersecurity acquisition Missing Link, which they've done. All of these are also in line with that policy. So I believe it's actually a very good move, the buyback. So I hope this clarifies or answers your question.
It does, Shushovan, but just for a complete viewpoint, do you believe that IT companies in general are doing enough in terms of ensuring that they are staying on top of the AI game, in your opinion?
So, Harsh, on this, if you look at the AI value chain, right, first you will have the cloud, the chips, which is basically your NVIDIAs of the world, right? Then you have someone like the cloud infra players, which is the AWSs, the GCPs of the world. Now Oracle has become one strong player there, which is highly capital intensive. Then you have the foundation models, which we have the open AIs of the world. The next two parts, one is the applications, and then you have working with the Databricks or the Snowflakes of the world, where we end up becoming the implementation partners. Whenever there has been a technology transition, even if we go back to the cloud, there has been a period of lull for Indian IT players, after which they have adapted well to become the implementation players of the incumbents at that point of time. At that point, it was ServiceNow, and ServiceNow and the other folks. Now it is basically going to be Databricks and Snowflakes. And if you look at companies like TCS, Infosys, LTI, Mindtree, all of them are also working towards being implementation partners for Snowflakes. So they are going in the right direction, but obviously, if you look at whatever is happening in the environment, right, the macro environment, the discretionary demand also has not yet come back. That is why you're seeing the growth, which is comparatively lower. That's one. And from an AI perspective, because of the productivity improvement, sometimes you have to pass on these productivity improvements to the end customers, which will also result in a revenue deflation, which is what is happening to them. So in my view, they're going in the right direction. Possibly they can be a little more aggressive, but at least directionally they're going in the right path.
Taken. Okay. And do you believe that there is a larger opportunity even outside of AI where they can invest their capital and make a much better return than just returning value to shareholders? Do you believe that this returning of value to shareholders is something that IT companies and their shareholders have gotten very, very used to? And if they don't do it, they fear that the shareholders might punish them. And is that a very real fear? Just give us that perspective.
So I think that's a very fair point what you've made. The other way of looking at it is possibly go for acquisitions, right? Which is what they are doing in a very disciplined manner as of now, most of these companies. And possibly what we'll see is that over the next 2 to 3 years, there will be a lot of consolidation that may end up happening in this sector. And directionally, they're going in the right path, but possibly they can be a little more aggressive. But as far as acquisition, someone like an Infosys, very recently Wipro also had done this Harman acquisition, right? In the ER&D space. All of that is directionally correct, but possibly they can be a little more aggressive. But your point taken, sometimes it so happens that if you don't give these dividends or you don't resort to the buybacks, then you may get punished from the investors, because that is something which is a very stated policy. But if you compare this with what is happening in the US, possibly the US is a little more mature ecosystem where the product focused players are rewarded a little more, and people also have patient capital there, right? Someone like an Amazon was continuing to burn cash for a significant period of time before they came up with AWS, which turned out to be their cash cow. So people were patient enough to have the ability to tolerate those losses, and then because they believed in the long-term story. Here, it is slightly difficult to convince the investors, because one needs to have a very long-term view on product-focused companies, and it is also highly susceptible to disruption, right? That was my limited submission on this.
Yeah. I take your point, Sushovan, fully. And thank you for that. Let me ask you a slightly different question from a shareholder standpoint. Now there is clear visibility that 85% to maybe 95 sometimes percent of your profit is going to be distributed as cash flow. Where within the pecking order are you seeing the best value? And is Infosys in particular looking attractive primarily because of this return that they are giving on a one-shot basis to their shareholders? Is it an opportunity of sorts? Is Infosys on that list?
So if you look at our view on the sector, I think the last couple of months we have turned positive on large cap IT. But it is not primarily because of the valuations. Our top picks have been LTIM as well as Infosys. Now it is Wipro and TCS, followed by HCL and TechM in that pecking order. But one of the reasons for that is a couple of things. One, from a valuation standpoint, the other is the execution bit. If you look at someone like an LTIM and Infosys, right? Infosys has been one of those innovators where it has leveraged on its Topaz and the cloud platforms, right? Especially Topaz and the Cobalt platforms in AI and cloud, right? So these, the execution ability of someone like an LTIM and Infosys has been much better than the others. And even from a future perspective, right? Someone like an LTIM, for instance, it has also launched its agentic AI platform, which is called as Blueverse, which has been doing quite well. In fact, they're also winning a large number of deals leveraging on AI. I think they have been one of the first in the street, along with Infosys, which have leveraged a lot on AI. They're large deals. So that is something which gives me comfort, at least as far as these companies are concerned. And valuations obviously have come to attractive levels. That's
favorites, Sushovan, your favorites in terms of a pecking order, in terms of a list?
Yeah, so as I mentioned, LTIM followed by Infosys, that would be large cap space. by Wipro, TCS, HCL Tech, and Tech. In that pecking order from a large cap perspective.
Purely from a buyback participation perspective, should a shareholder buy at this juncture? And I'll simplify it more. Maybe a shareholder in the 10% or lower bracket, the 10% or lower tax bracket, is it lucrative enough for him to buy shares at this point to maybe create an arbitrage opportunity?
See, I'm not very good at the arbitrage perspective. I was looking at it more from a long-term perspective, right?
Sure,
so from a long-term perspective, these are good plays.
Okay.
I would continue to buy them even from a long-term perspective. But arbitrage, what's happening from a buyback standpoint, I think the taxation rules have changed, right? So as far as buybacks are concerned, post October 24. So I would not be able to comment on the on the arbitrage opportunity, but from a long-term perspective, these are very good picks, is what my view is.
Excellent. Thank you so much, Sushovan, for coming in and speaking with us. It was wonderful chatting with you.